Hey, everybody. Welcome back to another episode of the Liquid Lunch Project. I am Matthew R. Meehan alongside my partner, the professor, Luigi Rosabianca. What's on tap today, Lou?
Matt, we are going to do a deep dive on a term that we've been hearing on and over again for the last 5 years. And it is CFO, a Chief Financial Officer, and why it's important for a small business owner and why every small business, if you're scaling, needs one. Today, to help us do this deep dive, we have Teresa Wagonseller, the founder of Higher Up CFO Services. Teresa, I think a good place to start would be if you could help us decipher the difference between a CPA, a CFO, and their respective roles on a small business, please.
Yes, of course. So I am actually a CPA, and I started out in public accounting doing tax work, specialized in corporate and partnership taxation for 10 years. And then I left that world and went into the industry and worked for corporations as, corporate controller and chief financial officer for the last 20 years. The main difference between the two is a CPA is focused on the past, recording past transactions, compliance work such as tax filing, audit, which is all very important. The CFO, Chief Financial Officer, is focused on the future growth of the company, taking the company from point A to point B.
So you left the CPA world because you saw that there was a need in the small business space for them to have CFOs? Is that the new trend? Because we're seeing it over and over again.
Yes, I left the corporate world. I worked for multi-million, billion-dollar corporations. And however, I started with the small mom and pop and the small SMEs of the world. So I've come full circle, if you will, opened my own business a little over a year ago to work with these small business owners, because my thought is every business, regardless of the size and regardless of what type of industry or what business they're in, they need a strategic financial leader.
I couldn't agree with that more. We work with a lot of small businesses, and the reason most people start their businesses, they're really good at their craft.
Yes.
A contractor can build a house, an auto mechanic can fix my car. But at the end of the day, they're really just not financial professionals, right? They're really good at what they do. They're just not good at the business side of it. And I think what winds up happening is they don't know their profit margins. They don't know where they're making money, where they're losing money. And it's extremely important for them to bring somebody like you in. But I also know there's always a hesitation with a smaller business owner. Can I afford this? Do I really need this? How do you break that down for them?
Mm-hmm. Well, first of all, I will say every business needs it. The smart business owner, and I like to challenge, business owners, especially the new and young business owners, to a different mindset. Think bigger. How did these big corporations get to be big corporations? They surround themselves with a team of experts. There's not just one person doing it all, right? They have chief officers in every area of their business. So the finances is no different. And yes, the price or the cost of that is a factor for small business owners. So before you write it off or think, well, I can't afford that. That sounds wonderful to have somebody manage my money, but I can't afford that. Well, yes, you can. So it's a fractional CFO, which fractional is a fancy word for part-time or a portion of the cost, if you will. So it is affordable and accessible to small business owners.
Well, sure. I would imagine that having a fractional CFO, not to define a word with the word, but it would be a fraction of the cost of a full-time CFO. So as a rule of thumb, and I'm certain you see this all the time, where is that level of revenue when a small business can now bring that C-suite in-house?
That's a perfect question to ask. For small businesses, I have learned it works best. It's a best fit for annual revenues between 1 and 5 million is a great place to start. I find that, anything, I've worked with some smaller ones, but anything really under 500,000 a year, it's not going to be affordable. And I've worked with, companies all the way up to 10 million. I think when you get to a certain size, yes, you need to bring in a full-time financial
Okay.
officer at that point.
Okay, so let's build the business to 1 million. Let's bring Teresa in and let's get her fired when she grows us to 10 million and a dollar.
Mm-hmm.
All right, I love it.
Mm-hmm.
Perfect.
I don't. That's not a good business model, though. It's great for
That's
our clients. It's just not a good business
a-
model.
that's
It's a wonderful
that's how I
business.
define success. So success to me is if I can get that client, growth and big enough to where they do have to bring somebody in full time. I actually just offboarded a client and helped them hire their first full time CFO.
Oh, no, I think you're doing a great job and I love it. But can you help the audience understand? And, it's especially when you're first starting out a business or you're running it for a while, you go to your accountant who's not even a CPA, they're an EA, but basically they're a tax preparer. But then they want to charge me for preparing my taxes, and then they want to charge me for tax planning. Then they want to charge me for what is this CFO stuff now? I thought you were handling all that when we spoke about it.
Mm-hmm.
So it gets really confusing, the tax realm.
Mm-hmm.
Can you explain the tax realm and how things work? Lift the hood up a little bit for the audience.
Right. And that's a great question. And I understand that thought process. I encounter that with all new clients, when I pick them up. So, it's important that you have, yes, an expert and somebody that's taking care of your taxes. We all want to, stay in good with the IRS, of course. And that is important. However, the CPAs and your accountants or bookkeepers, they're not hired to perform the jobs, if you will, of growing the company, managing the company's cash flow, forecasting, projections, strategic planning for the company. That's not what they're hired to do. They're hired to fill out those tax forms and meet the filing deadline, if you will, and or bookkeeping, monthly bookkeeping, to give you financial reports for your business. They're not actually hired to decipher those reports for you or tell you what's going on in your business or tell you how to improve those numbers going forward, if you will. So it's a whole different, job description or whole different role.
Yeah, I think it gets a little overwhelming for, the guy that just wants to build houses. I just want to build houses. That's what I'm good at. But now you're telling me I got to hire a bookkeeper. Now you're telling me Uncle Sam's going to take half my money. But if I want to keep my money, I got to pay you for tax planning. Oh, and then I got to hire you to project my stuff. It just seems overwhelming, I think. And I just think a lot of the small business community doesn't even know all the intricate details that go into it, or the
Well,
differences between each CPA or CFO or EA, so to speak.
so let me tell
I don't.
you the worth of a CFO for any size of business. If a
Mhm.
CFO is doing a good job for your company and they can come in and they can show you through forecasting or projections, I can add $500,000 to your bank balance within this year, whatever the time frame is. And I'm only going to charge you a fraction of that cost. I'm going to charge you maybe 1%, 2% of that. You keep the rest. It's a no-brainer, right?
I'm sold.
No,
Yeah,
absolutely,
right.
100%. And I think just a lot of businesses in general don't even know what it costs them to turn the lights on every day, right?
No,
People
it's
forget
exactly
about
right.
there's a cost to turning those lights on, right?
Hmm. Hmm. I'm working.
Can you give us some
Mhm.
examples on the type of clients or different industries that you've worked on
Mhm.
and some creative solutions you've been able to find? Because I would imagine a white collar service provider is different than a manufacturer, and it's also different than a SaaS
Mhm.
company.
So I've worked for most of the companies I've worked for. I've worked for all different types of businesses in all different industries in the corporate world, manufacturing, service companies, SaaS companies, if you will, just all kinds. And the small business owner, regardless whether they're blue collar, contractors, general contractors, or white collars. I have a doctor right now that I picked up as a client. It's exactly, the point is exactly what we started out with. They went into business because they were good at what they're good at. They're not good at the numbers or managing the money, the finances of the company. They don't know what's going on in their business. And those are the best type of clients in reality for me to help, because they're looking for guidance. They're looking for someone to tell them what's not working in their business. Here's what to do about it, right? Here's what you need to focus on. Here's what you need to do. That's what a CFO does. And I have some specific examples. The company I just offboarded was a SaaS company, started out 2019, and he's just been blowing and growing. Great product, revenues, out of the roof. And but he had no idea, was not turning any profits, and he had a lot of capital investors putting money in that business. And there's like, where's the money? Where's the money? He could show them revenue growth, but he couldn't show them profits. And so we worked on that. We fixed that, and he grew to the point where he outgrew, the fractional CFO model. And so we hired a full-time CFO for him, and off he went. The newest client that I picked up is a doctor, a local doctor, and he's third generation. It's an optometrist, third generation, owning this company. And so he's got, there's two things you need to have a business or go into business and stay in business. You need a marketable product or service, and you need cash, right? So he's a third generation optometrist. He's got the marketable service. He's got all the clients, hand-me-down clients, from generations. The revenue stream's there. What he doesn't know, he doesn't have a clue on how to run his business from a financial standpoint. He doesn't know what his profits are, if his pricing is right, if his expenses are too high. He borrows money. He's got a line of credit. He's got family members that give him money for his business. I mean, money's going in and out all over the place, and he has no clue what's going on. We look at his financials, for example. He's been doing this now for 10 years, turned a profit 1 year. And, and he's like, where's all the money going? I'm making money. I've got money coming in. Where's it all going?
Teresa, in this Daffy doctor's defense, there is no business class in medical school. There is no business class in law school. There is no business class in chiropractic school. So these folks are out in the trenches and they're learning, but they're learning, unfortunately, by mistake.
Mm-hmm. Mm-hmm.
How do you change the discourse? How do you educate the small business owner to what Matt said earlier in making accountancy and forecasting a priority rather than an afterthought?
Mm-hmm. So he came to me. Actually, it was his commercial lender referred him to me to help him with his cash flow. So I have a system or a model, if you will, that I use for these clients, and it's solely focused on cash flow management, which encompasses, revenues and profits. That's part of the equation. But I focus on creating a consistent positive cash flow for that company, because in reality, whatever the personal or business goals is for the company, cash will solve it. Cash will get you there. You just need cash. Cash solves all problems in business. So what I do is I have this model. I meet with a client and we talk about what are your goals, okay? And then we set targets to reach those goals, certain key metric targets that we're going to measure and track on a monthly basis, okay? And I'm going to show them by forecasting, here's where you can be, at the end of the year. We can add this much cash to your bank balance, or we can grow your profits, this percentage, whatever it is. And I show them that. And I don't technically use, for example, this optometrist, most small business owners, one of the struggles they have is they don't know how to read their financials. They don't know what it means. They don't know what it's telling them, right? And so I try not to go over financials with these business owners in our meetings. So I have what you call a scoreboard or a dashboard, whatever you want to call it, that shows them these key metrics that we're trying to hit. Because if we can hit these targets, at the end of the year, then we're going to get to that where you want to be. And I just focus on those key metrics, and it's a scoreboard, simple scoreboard they can understand, so we can see if they're hitting it, if they're where they're missing. And then we stop and we focus on, okay, where are we missing it? And what do we need to do? What's the corrective action that we need to take over the next 30 days to improve those numbers, to get us back on track so that at the end of the year or the time frame, we're where we wanted to be.
So,
It's the higher up, measure up. I love it.
Yes. Mhm.
so we like to give actionable advice here and try to help the audience out every which way we can. Can you give the audience right now 3 things they can do
Mhm.
right after they're done listening to this to help them
Mhm.
improve either their KPIs or their cash flow?
Mhm. Yeah, very simply, probably the biggest thing I see, no matter what the industry is, their receivables. Go look at what your customers owe you. I guarantee you that's, if you look at that, you're going to have some past due amounts, that you need to collect, and or even current amounts, high dollar amounts. Pick up the phone, call those customers, have somebody, working on collections in your business to get that money in. That's cash in. Cash in is always priority number one. Get the cash in. So look at your receivables, who owes you money, and go get that money. Have a daily focus on that. Even if you just spend 30 minutes a day making a few phone calls, get that money in, and set up your terms, with your customers when you pick them up on the front end. Have, you want, short payment terms if you can get it. Most 15 days is great. Most people are in 30-day terms. And then the next thing you want to do is look at the flip side. Look at what's going out the door. What you're paying your vendors, suppliers. What kind of terms do you have with those? Can you negotiate extended payment terms? 60 days, 90 days. A lot of general contractors or business owners, they have great vendor relations. Leverage that. To test.
So, can I just stop you there for a second? So we want to shorten when we get paid from our customers and push out when we pay our vendors.
Exactly. Yes, that's positive cash flow.
I like it.
That's a simple.
It sounds like that's the classic problem of every contractor, right? Because you're doing a job and you're getting paid in stages,
Mhm.
and you're probably not taking enough of a deposit to get that thrust to get the job
Yeah, they
started.
should be
So
doing
you're spread.
deposits and phase billing,
Yeah,
so they are getting the money
yeah.
on the front end of the work, and then extending payment terms with their suppliers, and their vendors.
Mm.
Now, what do you do with a company that post-pandemic got a little bit punch drunk with the government alphabet soup, took on a little bit too much debt? How do you try to consolidate or manage the cash flow when a company is taking on too much debt?
Hmm.
This is prior to Teresa getting involved.
Hmm. I see that a lot. So, businesses come to me that when they need help, and those are the best clients. Those are the ones I love to help. Let's turn this Titanic around, right? You don't want to go bankrupt, obviously. And yes, maybe you've taken on quite a bit of debt. I think the first thing you got to do is I still go back to, cash is king. You got to focus on cash flow. And we've got to improve the cash coming in from the operations of the business so that we can use that cash to pay down that debt, and get rid of it. And that's in a simple terms, that's how you do it.
Sales cures all ails.
Sales and profits. It's a lot of times I say it's not about the money you make. It's about what you keep that matters, right? And you can go get all the sales in the world, but if for every dollar you're bringing in, 50% of it's going to the cost, for that sale, and then you have your operating expenses, say another 30%, and then you've got debt and taxes and whatever to pay after that. And so for every dollar you're bringing in, you got $1.20 going out the door. That's negative cash flow. That's not gonna help you.
Revenue is vanity and profit is sanity.
Yes.
Exactly what
And
it comes
cash
down
is
to.
king.
See, I disagree with you on that.
Oh,
I
okay.
do. We told this, and there's a lot of fallacies out there. So I just got back from South Africa, and you probably heard the song "In the Jungle," the mighty jungle. There's no lions in the jungle. Just like cash ain't king. Lions are on the savannah, and liquidity is king.
Mm-hmm.
Access to capital and liquidity is king, not cash, because cash don't rally.
Okay.
Hey, Teresa, while we're on this subject, is there a way that you can impart some wisdom when it comes to the actual bottom line on tax returns? Matt and I, on our day job, we run Shield Advisory Group. So clients are always coming to us for working capital. And we always hear this one sentence. Well, my accountant told me not to show a profit, so I don't pay Uncle Sam, yada, yada, yada. But they're compromising their lendability. Like they can't leverage that business's profitability because they refuse to show a profit. How do you have that conversation with a small business owner?
I have encountered that a few times, and that is a tax strategy. Tax strategies don't always align with business strategies, right? There's a huge
You
problem.
do have a wonderful Southern charm about you.
There's a huge problem with that. You know, and the first thing I tell them, okay, well, what are you going to do when you get to the point, you know, exit strategy, or you want to sell your business? You're not, you have no trend to show any profits in your company. You know, they don't think, most business owners, when they go into business, don't ever think about exit strategies, which you should be thinking about that, you know, at the time you go into business, right? You want to make sure the value of your business is always the best it can be. Opportunities can arise at any point in time.
Yeah, I couldn't agree with you more. I'm actually an exit planner. I don't know if you know that. And one thing that people wind up doing is they wait to the last minute to try to get their numbers in order instead of doing it just along the way, right? Because all exit planning is good. All exit planning is good business strategy at the end of the day. But when you do go to value a business, you have the real number and you have the tax number, right? So you have to recast the financials, right? So do you do that for your clients as well?
Right. Well, you're right. There's always a tax set of books, if you will, you know, cash basis. And then there's an accrual or, you know, accounting accrual basis. Okay. So there's a difference there. Yes. Now, but a lot of times when you go to sell a business, it depends on the buyer. You have a buyer and a seller, you know, and what does the buyer see? I mean, what does it mean to them, you know, that there's no profits, you know, in the business? Do they understand that that's a tax strategy and not a business strategy? So I think a lot of it depends on the perspective of, you know, the buyer.
That's a tough conversation to have, to try to convince a prospective purchaser, well, look, I'm not making money on purpose, buddy. My business is worth a lot more. It's a tough conversation. I want to be on the back end of that conversation.
Yeah. How does the buyer know? Okay, well, when I buy this, it's going to start, I can make it turn a profit.
Yeah.
I mean, how do they know?
Yep. It's out for you, Teresa.
Well, Teresa, we appreciate you being here. Can you tell the audience where they can find you on the socials?
Yeah,
or get in touch with you?
So I have my website is Higher Up CFO Services, and that's as in higher profits and higher cash flow. And I have a learning center page on there if you want to, with information, free information for the listeners. Some tools on there with how they can manage their cash flow directly themselves. Some easy tools. And of course, I'm on Facebook and I think LinkedIn and, you know, all the other social media platforms.
All right. Well, thank you so much. We want to be respectful of your time. I have one last question before I let you run.
Sure.
What's your favorite industry to work with?
My favorite industry to work with. Well, I'll have to be honest. I just love learning about what's out there. You know, I love working with the young generations, the millennials, the younger generations. They're just they're energetic. They have great ideas. You know, it's amazing to me what I find is out there. You know, and
they're blowing and growing.
Yes, they're fun. They're good energy, just like you guys.
I think they just try different things. It's like, I mean, listen, if we go back 15 years and you say, hey, I'm gonna own a content business and I'm just gonna create stuff and make money. Are you crazy?
And they do it. A lot of them are so successful.
Now they're making millions.
I know, right? Right.
It's so funny. But Teresa, thank you so much. Everybody, that's a wrap. The Liquid Lunch Project. We'll catch you on the next episode.
Thank you.
Thank you.
Let's go!